What's happening, crypto enthusiasts? Get ready for a rapid-fire update that's going to blow your minds. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest plays. We've got groundbreaking institutional moves, bold price predictions, and sharp insights into where value is truly heading. This is the news you absolutely cannot afford to miss, packed with the energy and insights you expect from Bitcoin Bulletin. Let's dive straight into the action. First up, a massive institutional player is signaling a major shift, ready to inject hundreds of millions into Bitcoin. What does this mean for its mainstream acceptance and your portfolio? We'll break down the details of this game-changing move and why it's being hailed as Bitcoin's big mainstream makeover. Then, we're looking ahead to 2026 with some electrifying predictions. Experts are eyeing a six-figure price target for Bitcoin, driven by powerful macroeconomic forces and significant whale activity. Could this be the year Bitcoin hits stratospheric new heights? We've got the inside scoop on what's fueling this bullish outlook. Next, we hear from a major voice in the space who's boldly declaring Bitcoin as the ultimate store of wealth for the future. In an era of economic uncertainty, why is this influential figure putting all their chips on Bitcoin as the best way to safeguard your hard-earned value? We'll explore the reasoning behind this strong conviction. And finally, we're dissecting the critical support and resistance levels that could determine Bitcoin's immediate future. Are we on the verge of a breakout or a pullback? We'll analyze the key technical indicators that every trader and investor needs to watch right now. Don't go anywhere. This is Bitcoin Bulletin, and we've got your essential updates. A monumental institutional endorsement arrives. In a move that could redefine Bitcoin's place in traditional finance, Strive Funds, a prominent US-based investment management firm, has announced its intention to allocate over $700 million into Bitcoin. This significant capital injection is slated to occur following the firm's upcoming public listing, marking a pivotal moment for institutional adoption of digital assets. CEO Matt Cole revealed that the investment will be strategically deployed in phases, a measured approach designed to navigate market entry while maintaining liquidity. This commitment from Strive Funds underscores a growing institutional conviction in Bitcoin not merely as a speculative asset, but as a robust long-term hedge and a significant growth driver within diversified investment portfolios. The firm is positioning itself at the vanguard of traditional finance's embrace of cryptocurrency, signaling a broader trend that could influence numerous other asset managers. The sheer scale of this planned investment highlights a substantial capital inflow into the crypto market, with analysts closely watching the execution strategy to gauge potential market impacts. While Bitcoin's liquidity has seen considerable improvement over the years, such a large-scale acquisition could still influence price dynamics, depending on the timing and volume of the transactions. The positive market reaction suggests that investors view this as a strong validation of Bitcoin's legitimacy within the global financial landscape. Many observers anticipate that this move might catalyze a cascade effect, encouraging other investment firms to explore similar digital asset allocation strategies. This trend is further evidenced by data showing that over 75% of trading volume on major platforms like Coinbase now originates from institutional participants. Moreover, more than 35 publicly traded companies have amassed reserves of over 1,000 Bitcoin each, with corporate acquisitions surging by 35% in the second quarter of 2025 alone. This heightened interest from traditional financial institutions and corporations solidifies Bitcoin's evolution from a niche asset to a fundamental component of modern investment strategies, increasingly recognized as a legitimate store of value and a hedge against inflation. Bitcoin's inherent scarcity, particularly its inelastic supply, is a key factor in its appeal to institutions. With approximately 94.8% of the total Bitcoin supply already in circulation and a significant portion held dormant, the asset's limited availability is a powerful draw. This scarcity is set to become even more pronounced as Bitcoin's annual issuance rate is projected to decline to 0.2% by 2032. When combined with the escalating demand from institutional investors, who are often absorbing multiples of the daily mined Bitcoin, These supply-side constraints present a compelling case for potential price appreciation. The success of Bitcoin ETFs, which now facilitate daily trading volumes between $5 billion and $10 billion, with major players like BlackRock's iShares Bitcoin Trust leading inflows, further validates this trend. These products serve as critical on-ramps for institutional capital, cementing Bitcoin's integration into mainstream financial planning. This institutional influx is reshaping the market landscape. Could this signal the start of an even bigger wave of corporate crypto adoption? A six-figure future fueled by market forces. As the financial world navigates evolving economic conditions, Bitcoin's trajectory towards a $120,000 price target by 2026 is gaining significant traction among analysts and investors. This ambitious outlook is largely underpinned by a confluence of potent macroeconomic tailwinds and strategic movements from large-scale holders, often referred to as whales. These factors are collectively creating a fertile ground for substantial price appreciation in the coming years. The macroeconomic environment plays a crucial role in this bullish forecast. Persistent concerns about inflation, coupled with the potential for shifts in global monetary policy, are driving investors to seek assets that can preserve and grow wealth over the long term. Bitcoin, with its capped supply and decentralized nature, is increasingly viewed as a digital gold, an inflation hedge that can protect against the erosion of purchasing power inherent in traditional fiat currencies. As central banks worldwide grapple with managing inflation and economic stability, assets like Bitcoin are expected to benefit from increased investor demand, seeking safe havens and uncorrelated returns. Complementing these macroeconomic trends is the observable behavior of whales, entities holding substantial amounts of Bitcoin. Recent data indicates a significant accumulation of Bitcoin by these large holders, often signaling strong conviction in the asset's future value. This accumulation can create upward price pressure by reducing the available supply on exchanges and demonstrating confidence that can influence smaller investors. Whale activity, when it involves net accumulation, is often interpreted as a bullish signal, suggesting that those with the most capital are positioning themselves for a significant market upswing. The interplay between these macro forces and whale accumulation creates a powerful narrative for Bitcoin's price potential. Analysts point to historical patterns where periods of accumulation by large holders have preceded significant bull runs. Furthermore, the ongoing integration of Bitcoin into the traditional financial system, through avenues like spot ETFs, is broadening its accessibility and demand base. This institutional adoption, driven by the perceived value proposition of Bitcoin as a store of value and a growth asset, adds another layer of support to the bullish outlook. Projections for 2026 often factor in the halving cycles, which historically have led to bull markets as the rate of new Bitcoin supply is cut in half. The next halving is anticipated to occur in early 2024, and its effects, combined with the aforementioned macroeconomic and on-chain indicators, are expected to significantly influence price action leading up to and throughout 2026. The convergence of these elements, a supportive macro environment, strategic whale accumulation, and increasing institutional adoption, paints a compelling picture for Bitcoin's potential to reach and possibly exceed the $120,000 mark within the next few years. This forecast paints a bright picture for Bitcoin's future value. But how does this align with expert opinions on wealth preservation? Bitcoin, the unrivaled future of wealth preservation. In an era increasingly defined by economic volatility and a noticeable decline in confidence in traditional financial systems, Bitcoin has emerged as the premier asset for safeguarding future wealth. This bold assertion comes from Jack Mallers, CEO and co-founder of 21 Capital, who recently articulated why Bitcoin stands as the most reliable vehicle for value preservation in today's challenging economic climate. Mallers argues that the continuous debasement of fiat currencies, particularly the US dollar, effectively forces individuals into a perpetual state of speculation. He explained in a recent interview that every decision made in such an environment, whether consciously acknowledged or not, involves a degree of speculative risk due to the diminishing purchasing power of traditional money. In this context, Bitcoin presents itself as the optimal alternative, offering a robust mechanism to protect and carry accumulated wealth forward into the future. He drew a stark contrast between Bitcoin and conventional investment vehicles like fiat currencies, bonds, and even the traditional 60-40 stock and bond portfolio. Mahlers highlighted that bonds have experienced consecutive years of losses, while the long-standing 60-40 model, which has historically delivered consistent gains for 4 decades, is now showing signs of faltering. This performance of traditional assets, he contends, makes Bitcoin, alongside assets like gold, increasingly mature into a neutral reserve asset capable of empowering individuals to capitalize on their wealth. 21 Capital, under Mahler's leadership, operates with a clear identity as a Bitcoin company. Their strategy extends beyond mere treasury management. They are actively developing products, generating cash flow, and forging significant partnerships, including a notable collaboration with SoftBank. This holistic approach aims to establish the firm as a global leader in the Bitcoin ecosystem by integrating capital market access with tangible, real-world services. Mahler's vision is rooted in the belief that Bitcoin's market potential is immense, envisioning it as a $500 trillion asset in the making. He further elaborated that the focus on Bitcoin-centric financial services offers the most enduring and impactful opportunity in the digital asset space. Mahlers expressed concern that other cryptocurrencies, with their diverse and sometimes speculative use cases, risk diluting the core value proposition and focus. By concentrating on Bitcoin as the foundational element, 21 Capital aims to build a resilient and valuable enterprise that capitalizes on Bitcoin's unique properties as a store of value and a medium of exchange for the future. This strong endorsement highlights Bitcoin's role as a future-proof asset. But what about the immediate technical picture for Bitcoin's price? Navigating Bitcoin's crucial price juncture. In the dynamic world of cryptocurrency trading, understanding key support and resistance levels is paramount for identifying potential market movements. Bitcoin is currently poised at a critical juncture, presenting a pivotal moment that could significantly influence the sentiment and direction for both bulls and bears in the market. Support levels represent price points at which a downtrend can be expected to pause due to a concentration of demand. For Bitcoin, identifying these levels is crucial for determining potential entry points for buyers or assessing the risk of further price declines. A strong support level indicates robust buying interest at that particular price, suggesting that the market may find it difficult to break below this threshold without significant selling pressure. Conversely, resistance levels are price points at which an uptrend can be expected to pause due to a concentration of supply. For Bitcoin, overcoming a resistance level often requires substantial buying momentum, and a failure to do so can lead to price reversals. These levels act as psychological barriers, where sellers may become more active, anticipating a potential downturn or looking to exit positions at a profit. The current market setup shows Bitcoin testing or approaching significant technical indicators. Traders and analysts are closely monitoring these levels to anticipate whether the asset will break through upward resistance, signaling a potential continuation or acceleration of an uptrend, or if it will falter and retreat towards support levels, potentially indicating a consolidation phase or a move towards a deeper correction. Factors influencing these levels include broader market sentiment, macroeconomic news, institutional adoption trends, and on-chain data such as transaction volumes and holder behavior. For instance, a strong inflow of institutional capital, as seen in recent developments, could provide the necessary momentum to break through key resistance. Conversely, negative regulatory news or a broader market sell-off could push Bitcoin below critical support. The balance between buying and selling pressure at these specific price points will dictate the short to medium-term trajectory of Bitcoin. A decisive break above a major resistance level could trigger a cascade of buy orders, potentially leading to a rapid price increase. On the other hand, a breakdown below a key support level might invite further selling, leading to a more pronounced price drop. Consequently, market participants are keenly observing these technical levels as indicators of potential future price action, making this a pivotal moment for strategic decision-making. These technical levels are critical for understanding market direction. Now, let's recap the biggest stories shaping the crypto landscape today. And that's a wrap on today's essential crypto updates. We saw a massive $700 million institutional bet signaling Bitcoin's mainstream embrace. Expert predictions pointing to a $120,000 Bitcoin by 2026, driven by macro forces and whale activity. A leading CEO declaring Bitcoin the ultimate future of wealth storage, and a deep dive into Bitcoin's critical support and resistance levels. Don't miss out on any of the action. Hit that like button, subscribe to Bitcoin Bulletin for daily insights, ring the notification bell so you never miss an update, and join the conversation in the comments below. Follow us on all social platforms for more real-time news and analysis. Stay informed, stay invested.